Hey guys, how's it going? Value Venture Investing here today. So today we're going to be talking about Air Canada. Now, Air Canada on Friday released their Q4 2020-22 earnings as well as their full year results. Now I split out Q4 2022. I also have from Q1, Q2, Q3, Q4, so we can see each quarter, and we're going to also go over the full year results as well that they provided. I also listened to the conference call. There's quite a few very interesting things there, so we're going to go through that today. Taking a look at the stock on Friday, it was down over 8%. Pretty nasty day. So in this video, I'm going to aim to kind of shed some light on why I think the stock made that kind of move, what I think is going on with it. So the quarter that was announced was Q4 2022. Passenger revenue, you saw the headline that this was record Q4 passenger revenue. It was almost I think they quoted about 4.07, but it's $4.06 billion. Cargo revenue was 288 million, up a little bit from last quarter, but it's been gradually dropping a little bit, and we'll talk about that. Other revenue, those are onboard services and stuff like that. Pretty strong, 330 million. So the total revenue was $4.68 billion. So a little bit of a drop from last quarter, of course, but still showing that strength, showing that strongness there. And then we had a net income of 168 million, but you'll notice last quarter we had quite significantly more total revenue, and we had a loss of $508 million. Now, there's a reason for that, and you have to dig a little bit in the management discussion analysis to find this. But if you take a look at the screen right now, when comparing Q3 2022 and Q4 2022, you can see that our operating expenses were pretty close, 4.7 billion 2022, or rather Q4 2022, 4.67 Q3 2022. So not too much of a difference there, and those of course are like salaries, fuel, stuff like that, and we'll get into that a little bit later in the video here. But if you look at the non-operating income and expenses, the difference that made the difference here was the foreign exchange, $316 million versus last quarter it was $951 million loss. So that's what actually swung them to that profit. Everything else was pretty much online. So if you saw the headline, you went, oh yeah, they swung to profit in Q4. Yeah, they did, but it's kind of an extraordinary item. It's not a direct result of their operation. So I think that's where a lot of people got confused, and maybe one of the reasons that the stock is not as strong today as we thought. Regardless, that gave us an earnings per share of 41 cents per share. And you can see that that's progressively gotten better. I mean, it was $2.72, $1.60, that was allowed normality, $1.42, and now we're at positive. Cash is about 7.9 billion. So we've kind of kept along that. It started in Q1 about 8.5 billion. So for the amount of debt that they have, I'm pretty confident that they're in a pretty strong liquidity position. So now we're going to look at the year over year. So we're going to be looking at 2022 as a whole versus 2021. Now looking at the balance sheet here, as stated, cash hasn't changed too much. You have cash equivalents, and short-term investments. So the total cash, like I said, is about 7.988 billion. A year ago, it was about 8.96 billion. So a little bit of a change there, but that's to be said. There's nothing really else on the balance sheet that is too interesting. In terms of the consolidated statement of operations, the income statement, this is where we're seeing the positive here. So passenger revenue for the year was 14.2 billion versus in 2021 it was 4.4. That's a huge increase. Cargo was actually down a little bit, but the reason for that, we'll talk a little about this a little bit more, of course, is they're converting some of their aircraft back to passenger service. So it's still strong at 1.26 billion, but a year ago it was 1.495. It was almost 1.5 billion dollars. Others increased over $1 billion versus 400 million. So there's our total revenues of 16.55 billion dollars versus 6.4 billion dollars. So to me, this is one of the most positive things about what's going on. This growth is phenomenal. Company is growing back to what it was. However, then we get to the next section here, operating expenses. Those have gotten crazy. Specifically, aircraft fuel, $5.27 billion versus $1.576 billion a year ago. So that is definitely something that's making a difference. Of course, salaries and that have increased as well, but that's, not surprising as well, considering all the employees that they're bringing back and that they're not at full capacity. So they're not, they talked about this in the conference call actually. that they're not, efficient with the employees because there's lulls and they have more employees than they need in a lot of cases. So total operating expenses were 16.743 billion versus 9.4 billion. So that's a pretty huge difference. But even with that being said, the operating loss was 187 million versus over 3 billion a year ago. And that's of course because we have so much more revenue. So that's where we're going to see the tweaking happening and more profitability going forward. So now in terms of non-operating income, this is what we talked about before, but we were just talking about it on a quarter-over-quarter basis. That foreign exchange loss, it was significant actually for the year at $732 million. Even on Q4, it swung to positive. So that's only one big notable difference that I can see there. Total non-operating expense was 1.3 billion. So yeah, there was those expenses there as well versus 932 million a year ago. So the net loss for the year was 1.7 billion. So we've seen a marketable improvement from last year. It was 3.6 billion dollars. So the basic and diluted loss per share for the year, $4.75 versus $10.25 a year ago. In terms of the consolidated statement of cash flow, the cash flow statement won't go on to too much here, but what I really do like to see is they were operationally cash positive in 2022, 2.368 billion versus a net outflow of 1.5 billion a year ago. Of course, in financing here, we've seen the proceeds from borrowings drop because they don't need that as much. Look at that difference. It's 202 million versus a year ago over $8 billion. Likewise, they have stopped issuing those shares. A year ago, it was $555 million versus just 6 in 2022. So not surprisingly here, for financing activities, there's actually being an outflow rather than an inflow because they needed money before. The decrease in cash equivalents was for the year $1.7 billion down versus 651 million up. So the cash equivalents at the end of the year were 2.693 billion versus a 4.4 billion a year ago. Now talking about the conference call, of course, we've kind of seen this trend already. Expenses have went up, companies growing, record revenues in some cases here. But what has spooked investors? What's made the stock tank, in my opinion, on one day? We're going to talk about that right now. So I got for the quarter and for the year they talked about, and then guidance. And there's actually one other thing I couldn't even fit on the board. There's so much here. So forgive me as I read because I had to jam all this on here. One thing that they did specifically mention was the weather events were extreme, especially in December. So this affected it. So that's a net positive for me, considering how strong revenue was. They were talking about I can't remember, 10-inch long icicles. Calgary, they couldn't even do de-icing, stuff like that really affected their operations. Of course, this was the main item that you might have heard about. We had record Q4 passenger revenue. So this doubled from Q4 2021. So doubled from a year ago quarter. And again, it's 2% more than Q4 2019. We always compare to that 2019, and we're actually more, 2% more. So that shows you the amount of demand of people, passenger traffic, as people kind of come out of the pandemic here and they want to travel again. Likewise, operating revenue. Now, operating revenue is passenger revenue, cargo revenue, and other. So it's all of it's our operating revenue. It increased 71% from Q4 2021. So in total, their total revenue base has increased significantly a lot as well. Cargo, we saw cargo drop a little bit, and we've seen a little bit of weakness on it, but that's something that if you didn't know, I mean, it's something to be expected. They actually converted a lot of their aircraft to deal with cargo as they knew that their passenger traffic was going to go down, which was smart. So all their cargo aircraft are now converted back to passenger service. And one of the analysts asked a question about is this going to be a driver coming forward? If you watch my other videos, you know that's something I'm kind of excited about. I think this is something that they should diversify more into. And that's kind of what they said. They said this is going to be a diversification going forward. They're still going to be focused on it. And it's definitely something that's going to offset seasonality, which is a really good idea, right? When you think about it, right? Because there's different times in the year when travel is much stronger than other times. And that's why you see differences in quarters and stuff too. Corporate travel. This is one thing that maybe is hurting the stock a bit, but not too surprising. It's not, it hasn't come back in the way that they expected. But passenger is extremely strong, as we saw some of the records that have been set. They are just kind of going with the flow as things are right now. I don't think they had any directional insight in terms of that. Operating loss So that comes after, the airline fuel, stuff like that. This is something that might have spooked investors. It was a loss of $28 million. And operating expenses increased by $1.47 billion from Q4 2021. So that just shows you how much those line items we went through there on the yearly have increased. Yeah, that might mean something that definitely spooked investors. And of course, like I talked about, fuel's a big one. Fuel was up by 800%. And then you had also wages, and they're still not hedging those fuel prices. They said they haven't changed their mind on that whatsoever. For the full year, now we're talking about the full year, which is probably a little bit better to look at because we're comparing to kind of a completely different time last year, and we're probably going to be more similar to this year, next year, hopefully a lot better. But anyway, for the full year, passenger revenues more than tripled from 2021. So huge increase. They're at 83% of 2019 passenger revenue. So that's another thing. It's like we're not quite there in terms of capacity. It's at 83%. Yet we're tripling the revenue. Operating revenues increased over 2.5 times from 2021. And we're at about 87% of 2019. So we've got some room to move. So that's a positive in my opinion because we're doing very good. And if we can get back to 100% capacity, yeah. And the 2024 is when they're expecting that might happen. Operating expenses increased by over 77%. So there you go. That was something that they talked about at 2024. 2023, we're not going to really see it in terms of the guidance. They're saying 90% of 2019 for the full year 2023. So the full year, we're going to be about 90%. And hopefully in 2024, we're going to be at 100%, right? So I think that might be another reason that people weren't expecting that. I'm going to grab one piece of paper here. I had to write this on a piece of paper because there was so much here. This is another thing I think that affected the stock why it was down. In terms of CASM, so that's cost per available seat mile, they said it was going to increase 8 to 10% compared to 2019, but they previously stated it was about 2 to 4. So we went from 2 to 4 to 8 to 10, and this is due to higher traffic pressure, staffing levels, and general inflationary pressures. So that's going to be the thing I think that has spooked investors a lot. It's the inflation, it's the costs. Of course, a lot of these costs go along with increased capacity, but they're kind of getting out of control a little bit. So overall, I think it was a good quarter in terms of seeing the demand, but we're going to have to look a little bit more in terms of these costs going forward. Because if you back out that non-operating expense that came in, the foreign exchange, we'd actually be at a loss again here. So people are looking for profitability in Air Canada, and it's been quite a while. So I'm still bullish on the stock. Of course, I'm not selling, but it'll be interesting to see what's going to happen going forward in terms of the cost structure, stuff like that, if the demand for passenger, cargo, and other is going to continue to rise. So I'd love to know what you guys think. What do you think about this quarter? Do you have any other insights? What do you think we're going to see for the year? Do you think we're going to see about 90% of 2019? You think it's going to take to 2024 for us to become profitable again? Love to know what you guys think. And again, don't forget to like and subscribe to the channel, guys. It really helps the channel. And I'll see you in the next one.